Cool. So, okay, we are live. Thank, thank everybody here for coming. And my name is Lyman. I don't think people can see me right now, but I've been getting a lot of questions about out-of-state real estate investment, and I wanted to bring on people that are experts in their specific areas. So we have Lori from Austin. Is that correct? Austin? Okay, sorry. Jason from Las Vegas. Tony from Portland, even though he's not from Portland right now, at Portland right now. And then we have Tim Herr from Atlanta. So I will let Lori introduce herself first.
Hi, I'm Lori Goto, Austin, Texas. I'm a real estate agent here. I've been living in Austin for over 22 years. It has doubled in population, and we project it to double again in 2050. And we have about 2.1 million people here in Austin. Thanks for joining.
Thank you, Lori. Jason, why don't you go next?
Sure, everybody. My name is Jason Shelkey. I'm in Las Vegas, Nevada. I've been a residential real estate agent for the last 11 years. Prior to that, my experience is in commercial mortgage-backed securitization. I'm originally from the East Coast, New Jersey, New York City area. And I do specialize in investment properties in the Las Vegas area as well.
Thanks for joining us, Jason. Tony, you're up.
Hi, I'm Tony Nago from Portland, Oregon. Been a realtor since 2006. Our current inventory is about 0.7 month worth. So it's a very hot market in Portland right now. And I specialize in investments, move on up homes, and I'm very passionate about halfway homes for rentals, and I do the BRRRR method.
Thanks, Tony. Okay, Tim, you're up.
Hey guys, I am Tim Herr from the Atlanta market. I have also been in, it seems like a lot of us are veterans in real estate. I've been in real estate since 2007. And it's been an interesting journey, I'll tell you that much. Atlanta's pretty hot, so we're happy to have everyone that wants to be here.
And Tim, you're also a big part of ARIA, right?
Yeah, thank you. I was very fortunate to have a lot of my friends and chapter presidents, including Lori and Tony, to be elected as the next incoming ARIA national president in October. So that'll be an interesting journey. It's definitely been a ride since COVID. So ARIA all the way.
Yeah, so San Francisco is my hometown, and that's where the national convention is. So Jason, I don't think you're a part of ARIA yet, but if you are free in October, come on down to San Francisco.
Absolutely. We just, it's been confirmed it's going to be at the Westin St. Francis. Apparently it's haunted. I did not realize that. I wasn't a big fan of the haunted part. But other than that, it'll be a great time. We're expecting about 500-600 people, about half the normal attending just because it's COVID. But we're definitely excited about the opportunities that's going to be happening in San Francisco. A lot of cool stuff. Because if you know our current president, Amy Kong, she's going over and beyond. And we're going to do those private shopping tours, and we're trying to plan everything out. So it's going to be great.
Awesome. Okay, so let's hear a little bit about your prospective markets. If you guys have slides to share, feel free to share them. Screen share is enabled. So Lori, why don't you give us an update on what's going on in Austin? Lori, you're on mute.
Screen share, it's not working. You guys
Yeah,
still with,
we
still with me?
yeah, saw it earlier. So I think if you screen share now, it should be fine. There you go.
Okay, there we go. So Austin's in Central Texas, just to let you know where we're at. We're north of San Antonio, we're south of Dallas, and Houston is about 2 hours away, drive time. So I just want to give you kind of an overview of what's going on. Austin is considered Austin and Round Rock because Round Rock has about 1 million people, Austin about another 1 million people. So they've grouped them together. And in our sales in April have jumped 37%, but there's still opportunities to buy because we still are going to double in population. So 2019, our average sales price was 314. 2020 was 338. Right now it's 460. So it has gone a big jump. So you definitely want to get in as soon as possible. The median income, of course, is higher than the US income here because we have a lot of technology and is tech jobs here. Existing home inventory, of course, has dropped like everybody else at 1.7 months of inventory and gone down to 1.5 last year. Now we're at 0.5. So less than a month of inventory is really hurting us. In 2008, after the market crash, 2010, we were at 13,000 homes. Right now we're at about 2,000 homes on the market. And here's Austin. We have tons of major employers here. This is just a few of who's coming out. Of course, Tesla and Apple has a campus coming up. And we have Facebook, Google, Samsung, Electronics, National Instruments. And we do also have the University of Texas and also the state capitol jobs. So that's why it's a great place for everybody to come here. Investment wise, I wanted to give you kind of a scenario of what we're looking at. If you're looking at multi-family units for like a $550,000 duplex, 3-bedroom, 1.5 bath. This was actually on the market. 2-story, rents about $1,600 to $1,800 a month. Taxes are higher here. If you guys don't know about taxes, I can explain it later. But it's $9,900 for taxes per year. And if you finance $440K, that's a cap rate 3.3. Single family seems to be a lot more easier for people to buy, more affordable. I have a lot of people buying single family homes because you can still get in at 350, under 400K and buying a property, even if you have to go over asking price. So I just had a client buy this property, 375, went 25K over. We did get the property and got leased out in like 5 days. It rents for $2,200 a month, cap rate's 5%. So there is still opportunity out there, even if you have to go over asking. So I tell people, so that property was actually in Leander, the outside, basically suburbs of Austin. That's the only way you can get in there because Austin, the average price right now is $824,000. So future growth, if you look at the future growth of 2024 from the Austin Chamber, everything in the dark green is all outside of Austin. So I tell all my investors to just buy $300,000-$400,000 homes all around Austin area. And then of course the west side, this is where the lake is here. So the prices definitely get higher. So I kind of give you a price range of, you know, what the price range would be higher, like if you're looking at a restaurant. And then next up, of course, is your goals of your investments. And I'm here to help and ask you and any questions you have and work on your budget, pre-qualification, if you're looking for long-term or short-term goals. Thank you. You guys have questions or we can cover those later.
Thanks, Lori. We'll save the questions for later on. So that's great information to share. Jason, you're up.
Yeah, great, perfect. So the number I'll be discussing will apply to the entire Las Vegas Valley, which includes the city of Las Vegas, Clark County, unincorporated Henderson, and North Las Vegas. So similar to the other numbers you're going to hear from the other presenters this evening, our numbers are up significantly year over year. So our median price point for the entire valley in the Las Vegas area is $386,000. That's up 25% year over year. Still somewhat affordable compared to some of the other big cities around the country. One of the more interesting facts that I wanted to pinpoint here is Las Vegas does have a ton of new construction. We are a new city, probably similar to Austin as well. With that, our average price point here, price per square foot, is $203 per square foot for single family properties. And the new home construction price per square foot average is 197. Typically in the past, we've usually seen new homes around 20 to 30% higher on a price per square foot. And now we've actually seen them come below the resale value. So I'm starting to see a lot of investors go to the new construction points. They're getting warranties for 10 years on the properties. They know they're getting a new home so that they don't have to worry about repair costs and things going forward. The builders are increasing their prices weekly or every 2 weeks at this point. However, they're not able to increase them as quickly as the resale market has risen due to their appraisal constraints and things like that they have going on. Our inventory is currently at just 0.7 months, which is up slightly from the previous month. So we started to see listings increase a little bit, but also the sales have continued to increase over the last few months. I expect that number to continue to rise. I think we're starting to get to a little bit of an affordability issue in the Las Vegas area where your median income cannot afford the median price of a home any longer. So we'll see what that happens over the next few months. And I've also noticed a slight slowdown here in the valley. And when I say slight, we've come down from getting 20 to 30 offers on every property down to about 15 to 20 in a 3 to 5 day period. So I don't know. It's also 115 degrees right here today, so that does sometimes slow things down. So we'll see if that continues on for the rest of the summer. And then also, what else did I want to discuss on there? The one aspect that I've seen that's very good for investors to target here are properties that are already occupied by tenants. And the reason for that is most people that are looking for their primary residences will not go after those properties, so the competition is a lot less. So those are usually the ones that I'm advising my clients to usually focus on rather than competing against 20 or 30 others with some of the other resale properties. And then as far as multifamily goes, the Las Vegas area really does not have a lot of multifamily product in the residential sector, so 4 units or less. Here, most of that product was built 1985 or earlier, and they really haven't built anything new from there. The ones that are existing, we usually have about 20 to 30 multifamily residential properties on the market at any given time. And those are typically a little bit more work involved. They're built in the 50s, 60s, and 70s, so a little bit more risk as far as repairs and things may be concerned. And they're generally located in the downtown Las Vegas area or areas similar to those in income. And that's my wrap for the Las Vegas area update.
Wow, 115? That's crazy hot out there.
Yeah.
All right, Tony, you're up.
Our Portland market is similar to everyone else. It's very hot. We're about 0.7, 0.8 month of inventory right now. I have seen property goes even from the 500K list point up to like $1 million plus, where they'll go at least 25% over, just depending on the demand, the location, quality of the home. And so, yeah, Portland is extremely hot. And I don't see that slowing down anytime soon because interest rate is still pretty low. There's still people moving in. There's a lot of demand for properties right now. That's the Portland market.
Okay, Tim.
So most of our clients actually are coming from out of state. So we're actually seeing a very big migration, or a lot of investors coming from New York, Chicago, some of our gateway cities, Chicago, New York, definitely San Francisco. It's very unique when we do a buyer consult from San Francisco, because we're like, hey, what's your what's your price point? They're like $1 million. And we're like, wow, you can buy everything $1 million in Atlanta. So it's we're like, this is great. We love our San Francisco clients. So, but for investment purposes, we have a lot of our California clients coming into Atlanta as well. Atlanta is very interesting because depending on who you talk to, we're about 17 metropolitan counties. And so it's a very vast geographical area. Georgia is one of the most populous, it's a state that has one of the most counties. So it's a very interesting, the market, I guess, so to speak. Atlanta, Georgia is one of the top relocation companies. We're very business friendly. And so we just announced Google, Microsoft, actually building their new offices here. Microsoft just announced theirs. Amazon is building massive amounts of headquarters and data centers here. We're one of the fastest growing. We have one of the most number of Fortune 5s. I think the Atlanta airport, again, is the busiest airport in the world, being the hub for Delta Airlines as well as Southwest. We're forecasted, we have, I think, one of the most, I think we're number 3 or 4 in terms of Fortune 5s. And so if you think of Coca-Cola, UPS, Delta, Home Depot, the Boy Scouts, again, we have a lot of Fortune 5s coming in Atlanta, and it's just getting bigger and bigger. We're forecasted to have about another about 2 million new jobs in about 20 years. So again, we're kind of like Austin, we're kind of like Dallas, where in Portland, we're getting the big migration of companies coming here because of the cost of doing business. We are also a very landlord-friendly state, so that kind of helps as well. Georgia, Atlanta, when we say Metro Atlanta, a lot of our investors actually don't invest in Metro Atlanta proper. Atlanta proper tends to be more what we're thinking of, the high rises and condo, and a condo like the condo living, but it's not really, the ROI may not work. There's a lot of rental restrictions in condos and high rises in the Metro Atlanta area, and the prices tend to be a lot higher within the Atlanta metro, what we call ITP, inside the perimeter. So a lot of our investor clients they actually end up going outside the perimeter, OTP, and they can get a better ROI. In terms of quick stats, we are just like every other city. I know Lori and Vegas and Portland, you guys are all crazy, and so is San Francisco. We've never had multiple offers. We've never had 50,000, 100,000 over list price. And actually, most of our clients that are doing that are actually from California. So, because it seems to be a very commonplace, and they're coming with cash. So it's kind of pushing out some of our first-time home buyers, and it's driving up the prices a little bit. The rental prices and apartment prices, because those are also increasing. So with that, a lot of people are they're renting because it's a lot easier to rent. We have about a month worth of supply. Builders are now basically putting in clauses in our contracts, which is never unheard of, to say that the builder can cancel the contract for whatever reason whatsoever and pay the buyer $500. We're seeing contracts that we have gone under last October finally the construction is starting now. And yeah, actually today I just got an email saying, hey, we're going to do a price increase, take it or leave it. We're about to give you $500. Basically you have no choice. So builders kind of have a little bit of the power. So it's also spurring the demand for resale. Our average price point tends to be in the 3s. It's gone up in the past 2 years. I would tell you back in the day, about 2-3 years ago, it was probably in the 200, 250. Now we're pushing 350. But it's still a very good attractive. I'll tell you, our last client from San Francisco, actually, we were able to score something for about $225, and he's getting about $1,600 in rent. So because we're also very landlord friendly, state of Georgia, basically if you miss one payment, you can actually take them to dispossessory court, and the sheriff will actually if you don't answer the door, they'll tack it on the door. You have a week to respond. After a week, if you don't respond, it's an automatic judgment, and you can go straight to the sheriff and hire the sheriff and get you out. Or if they do respond, you go to court within a week, And again, it's all settled pretty much within 2 months. Because we are so landlord friendly, we have a lot of out-of-state investors really being attracted into the Atlanta market. And again, the ROI, it's going to be dependent on everyone, right? Because everyone has their own appetite. Austin, Vegas, Portland, everyone's going to have a little bit different. But because we have been so landlord friendly, I think that's been one of the biggest attractions to Atlanta or the Atlanta metro market. Because it sounds like some of our California friends and our New York friends, it takes you guys a year to evict somebody if you don't pay. Yes, we had a moratorium in Georgia as well, but they had nowhere else to go. So it just piled on. So you're like, hey, and then now the moratorium's lifted, you need to go. So it has been very interesting to see how how our investor market has kind of shifted. But we are seeing a very big, very, very, very big market coming in. Yeah, and if you have $1 million, you can buy 3 or 4 properties or 5 properties if you're kind of looking in the lower range, instead of buying $1 million property, which seems to be commonplace in some of the bigger markets. So that's Atlanta for you.
Thanks, Tim. Thanks, everybody. That's great info. I'm going to see if anybody have any questions right now. Looking around, no, not yet. Tony, I know you've done a lot of investing out of state. You want to tell us, are you still doing that now? Have you stopped? What was that like?
Yes, I did invest in Ohio, Columbus, Ohio, Cleveland, Ohio, but then those were more or less like duplex around 50, 60K. I was collecting like 1,300 bucks gross rent. However, I had to pay the utility bills, like 200 or 300 bucks, management 10%. There's always something going wrong with it. So I bought in with the intention of doing a cash out refi in a couple months, but with COVID hitting last year, the banking system kind of went away. And so I ended up deciding to sell out of that and get my money back because I didn't like having money stuck over there. So I'm out of Ohio. We just bought a property over in South Dakota. And I think I like that market better because it's 2,200 square footage. We bought it, it was listed for 270. We bought it for like 275 or 280, 25% down. Our mortgage on a 3.25 interest rate, I think it's like $1,350 a month, and we're collecting $2,100. So with that, it's doing great. I'm trying to buy another one right now. So my goal is when I put out money, I like to see about 10% cash on cash returns. And I have a group over there that I'm actually working with, the same group in Portland. They're halfway homes. I rent to Oxford Housing, and usually they'll stay there at least 5 years. They'll sign another 5 on top of that. So tenant base is long-term, and they actually have a clause in my contract saying that if any repairs under 300, 500 bucks, my fault or the property faults or their fault, they'll still fix it. And I really like that. So my niche right now is halfway homes and to this one group. And I'm trying to acquire more property each year just with them. And they're based in California, Oregon, and South Dakota with this chapter and this senior rep person.
Thanks, Tony. Really appreciate your insight on other states. Anybody can answer this. What's the best way for somebody from California to work with you guys? I mean, what's the process? Since now that we can travel, do we just fly out? Do we call you first? How do you guys like to work?
Sure, I could take that one for now because obviously Vegas, amongst your other states as well, we're getting a huge influx of people from Central and Southern and Northern California. So typically the process for out-of-state clients, I usually start off with a quick phone call to assess the client's needs and what they're looking for and what their timeline is. And then from there, we schedule typically a virtual Zoom call for 45 minutes to an hour to dive a little bit deeper into what they need, what the market is, and the different neighborhoods that we offer here. From there, depending on what their preference is, the majority of my clients coming in from California have relied on me to solely go look at the video, go look at the properties for them virtually. So either taking video, FaceTiming with them, or Zooming from them from the property. And then from there, we're writing offers. The average days on market here is around 6 days, but typically offers are getting cut off after 2 or 3 days, and it's just taking the seller 2 or 3 more days to essentially go through the offers and make a decision and change the status under contract. So time is of the essence, and it usually doesn't allow for a flight time or travel plans, at least in the current market. As things change or shift, obviously, hopefully we'll get back to a little bit more of a balanced market where people can actually travel and see the properties ahead of time.
It's kind of similar to Atlanta. Our firm doesn't do property management because I don't want the liability. But we partner up with a lot of property management companies, and they actually give us first dibs. So because they know we have a list of investors and clients that actually want to buy, they actually say, hey, we're about to put this in the market. Do you have a buyer for us? So it's been actually, we've been kind of avoiding some of the multiple bid situation. And again, for the landlord and the property management company, it's great because they don't have to worry about getting access with the tenant. And they have an existing tenant, so you can already calculate the ROI. So it works out. But we're kind of like Vegas. I mean, there's no time. The time that, because again, we're on the other side of the, it's too much coordination. So Helen and I, my business partner, we've done videos for a long time. So, like Texas and Florida, nobody believes in COVID in Georgia unless you actually catch it. And so we've been an open state since pretty much day one. We were a race to open first. And we've always, so a lot of our clients, we're really big on video. So we will actually go on behalf of our clients and we go and film the video. We kind of film the area. We kind of want, and we give them a basic idea of what it could rent for. And again, as an investor, it's a little different, right? Because you're not really looking at the house to live in. You're looking at strictly numbers, in making sure that the house is actually, structurally sound. What kind of negotiations can you do with the house? Or what are you getting yourselves into? So a lot of that comes into play. So as long as the numbers work out, and again, we'll have a talk if it's something that you want long-term. I'm more risk adverse. So I tend to look at, as long as it covers my mortgage, covers my payments, and I can have a return at the end when I sell, I'm very happy. I have a lot of clients that say, absolutely not. I want a bigger ROI, hit me. And I don't mind paying the property management company, and I'm going to go down to a little bit, where it could give me a little bit more higher return, even though I'm not in state because I have a property management company that offsets the amount. So it's a lot of just talking and dialogue. It's the same thing, you guys. That doesn't really change. It's just a matter of, where do you want to be? You want to be in Texas, Vegas, Portland. I would say follow Tony because I know Tony does a lot of investments and usually his numbers are usually very good. So that's always a good one.
Yeah, and I just wanted to follow up on one thing that Tim said that I think is a really good point, and it's really focus on the numbers. Occasionally I get investors, they go, well, I don't like the way this is laid out, or I don't know if I like the way this toilet looks. Those things shouldn't be important to you. The things that should be important are how much you're getting for rent, what are the carrying costs of the property, and what are you going to make on a monthly or yearly basis in the return. And sometimes that's hard to drive through to new investors, but that's the best advice that I think I could give as far as looking for a property.
Yeah, and I like everybody's ideas, and I wanted to know actually more from Tony how this halfway home stuff works.
Yeah, so halfway home, the company I work with is Oxford Housing US, probably. They're been around like at least 40 years. So basically it's A is a ladies' house, or B, ladies and kids, or B is a men's house. And there's no drug use, there's no alcohol use, etc. They agree to a certain price per month, and then they just pay me that. Usually is about 25% more than market, and they turn around and rent room by room to each individual person. They get, especially in Portland, they get a startup fund, like I believe $4,000 with City of Portland zero interest, and they have to pay it off within 24 months. Usually my rent with them will be 1 year, or sorry, 1 month to 24 months at a certain amount. And then the third year going, they'll increase it about like 150. And then after that, they'll increase it every 50 bucks. I don't charge a security deposit, so it's easier for them to get in to the property, but we have a mutual understanding that, hey, you have to take care of the property. I like it because it's long-term tenants. In the past, usually my property are turnover one or every other year. And each time someone turn it over, it costs me money. It'll cost the 1 or 2 months or the repainting, new carpet, etc. And if these tenants are staying forever, I don't have that turnover vacancy loss, and I really like that. And it works really well. Like property in South Dakota, I'm buying. They actually go in, select the property they like. I talk to the realtor, we make it work financially, and at the end of the day, as long as my number makes sense, where I get 10% on cash, and I know that in 5 or 10 years in that market, the property value should increase. It's probably going double. And I like the base or the entry price of like under 300, because in 5, 10 years, if it doubles, I could go back and do a cash out refi, pull back my original investment, take that and move on to a different property and still have an indefinite return. And so I really like that niche right now. And I'm trying to buy more 1 or 2 property each year towards that way.
Tony, are these single family houses, or are these like duplexes, or are they like multi-family rooms, or what is the product you're buying?
I am buying a single family. On average, it's at least 5 bedrooms or more. Sometimes we have to, if we want more rent, we have to convert the garage or maybe like a dining room. They don't use a formal dining room into a bedroom. So more bedroom equal more money because they can put more bodies in it. Like I have a property in Portland that's 9 bedrooms. They pay me $3,000. On average, that home would rent for maybe 2,500. So yeah, it just depends.
That's cool. I mean, it's very different from what people, because I've never heard of halfway houses as being a good income stream. So, I mean, Tony, you finance a lot of your properties, right? And then Tim, you get a lot of cash buyers. So I also have Michelle Rayo here to talk a little bit about financing, and I want her to talk a little bit. So go ahead, Michelle.
Hey everybody. So I'm Michelle with Wells Fargo Mortgage Banking. Just for compliance purposes, I have to get my NMLS ID number. That's 1198643. So with Wells Fargo, we can cater all of your network, right? You have the low to moderate income clients all the way to your high net worth clients. As far as investment properties or conforming loan amounts, we can offer up to 85% value. And for jumbo, we can offer 20% down or 80% loan to value. I know, I believe, Jason, you mentioned earlier that you work with a lot of new builds or new construction loans. We can also do extended rate lock up to 24 months. So we all know that there's a lot of challenges going on with new construction homes right now, and there's a lot of delays. So with the increasing rate that's been happening, we can protect your client's rate by doing an extended rate lock up to 2 years. So, and I'm licensed in all states, anywhere in the United States.
Wow, that's amazing. That's amazing because none of the lenders out here that I have been working with or the builders lenders have been doing anything more than 60 days for new construction. So really, really cool.
Well, then, Jason, you and I need to connect because I can help a lot of your clients.
I agree.
I wish I could do that in Georgia, but the builders are now they're not giving us contracts unless we use the builder's preferred lender. So because of that, they're not, they're saying if you don't qualify, or even if you decide to switch lenders last minute, they will terminate your contract. It's a really bad, like, the new construction market in Atlanta is very tough because of the lack of inventory. And again, because we're very subdivision based as well. And they know that they have, like, we just did one, there was 42 homes. There was 1,200 people on the wait list, and they said, "Hey, we don't even have a price. We're just taking contracts, and we'll fill in the price once we're actually ready to actually give you a price." And 1,200 people on the waiting list. It's crazy. So it's actually funny because me and my team, we just go around to all the communities and we just put our names down in the waiting list and we swap out our names with our clients. So it's, the new construction is getting to be that bad in our market. We're hoping that it does calm down, but it's funny because they're like, "Hey, yeah, you're number 5 on the VIP list. Congratulations." We're like, "Great, it's not for me, it's for our clients." We're swapping our names out. Thank you. But that's bad.
What builders are doing, it's like you have to put your name, and every morning, every Saturday morning at 8 a.m., you and your agent need to be on the conference call. And once they have a release, you have to say, I forgot the term, but it's either you play or you pass on to the next one. So that's every morning. And if your name doesn't get called, you have to keep going every Saturday morning.
Yeah, Austin has the same problem. So the builders there, some of them are not even paying commissions anymore. And then some have dropped the commission to 1%. And yeah, you have to be on the waiting list. Some are even auctioning off lots now before you even buy. And of course, those can go up to 200,000 to 300,000 just for a lot. It's terrible. Mm-hmm.
So it's really crazy right now, right? And one of the things that, because just like what Tim said, it's like the builder will put the amount once they get into contracts. So now you get into issues of appraisal gap. And that's something that me as a lender will need to communicate with the borrower and with the buyer's agent about appraisal gap. What's going to happen if the appraisal doesn't come as the purchase price? So that's a conversation that I've been having with clients as well, whether it's an investment property or a primary residence. Do you guys, like, for Tim, Tony, Lori, and Jason, do you guys get like appraisal gap, or, right? I think it's just all over right now.
What about contingencies? How are you guys with contingencies out in your markets?
Depends, right? So if the house has been on the market for about 3 weeks, sure, you can do a normal contract. If it's been on the market for like 3 days, yeah. I mean, yeah. Again, it's all new for Atlanta. Very new.
Yeah, very similar here. It really depends on the popularity of the property, what we can and can't do. Not seeing a ton of full appraisal waivers. We're seeing a lot of appraisal overages. So, buyer to pay $10,000 over appraised value if the property doesn't appraise at X. So things along those lines. Our board here, though, is getting, our real estate division, not our board, sorry, it's getting very critical of a lot of the verbiage that's been going into contracts the last 6 months. So we've had to kind of adjust the way we word things, staying with the confines of Nevada law. But yeah, appraisals, most people are saying, they're not going to request repairs, inspections to be done as informational only, things along those lines. And, from an investment standpoint, obviously you always want to do an inspection if you can, but repairs aren't necessary if there's nothing major. You don't need to worry about the doorknob that doesn't twist perfectly or something along those lines.
Great, thank you. I'm going to see if anybody has any questions. No? Okay. I think that's it. thank you everybody for jumping on and sharing your knowledge. I found the information really helpful. I hope everybody else did as well. And if anybody wants to share contacts, go ahead and just shoot me an email. I'll share it with people as well. So I appreciate you guys. Thank you.
Thanks for setting this up. Have a
Thank
great
you.
evening, everybody.
Thank you.
Thank you.
So